Hi, welcome to Main Street Macro. I'm Neela Richardson. You may have missed this, but economic growth actually slowed to just 2% in the third quarter of the year. And people are starting to wonder if the economic recovery is as stable and sure footed as it was in the first half of the year when we saw white hot economic growth. Well, here's three things that you should know about the economic recovery and the pace of growth in the last 3 months of 2021. First, it starts with the jobs market. Of course, I'm going to say that. I work for ADP. We care a lot about the labor market, but jobs are key as a long term driver of growth. Long term growth is really measured by the increase in the workforce and that workforce is getting more productive. And so, what we're seeing in the jobs market still is a tremendous amount of upheaval, but we're also still seeing gains and recovery. And that's also reflected in the record amount of job openings. So we know that labor demand is there for many companies wanting to add to headcount. And two, we're also seeing an increase in wages. That should help lure some of those workers who've been reluctant or reticent to get back into the labor market to really find opportunities in the current jobs market. Now, the second thing that we're watching that's going to be really impactful for growth in the fourth quarter is inflation. Because as much as there is in terms of jobs and openings right now, the simple fact is for most of Americans, real wages are actually decreasing because inflation has been so high. It's much higher than pre pandemic levels. And we're really seeing inflation in the things that consumers are most confronted with, it's most visible to consumers: energy prices and groceries. And so that might reduce some economic activity in the fourth quarter. It's something that the Fed is laser focused on and mentioned in their meeting, their FOMC meeting last week. And so we will continue to look at inflation as a metric of which to judge the stable pace of economic growth. And then the final issue, as we look towards the end of the year, that people are watching is supply bottlenecks. And this is really going to resonate during the holiday season. The fact that there are more empty shelves to confront that are confronting shoppers is due to the effects of the pandemic, not only in the United States, but globally. That's also led to higher prices. So it feeds back into those inflation concerns. Now, all of the issues we think will fade over time. They're transitory, part of the tremendous change we've seen induced by the pandemic. The good news is if you start with that first starting line, that jobs continue to improve even in this late state of the year, in the second half of the year. That's a good sign for economic growth ahead. Thanks for watching the Main Street Macro. For more information on the week ahead, please go to adpri.org.